But talking about action back home, a lot of earnings are coming through, and we have Mr. Satish Pai, the MD at Hindalco Industries, joining us on the show right now. Hi, Satish. Good to be speaking with you. While Q1 revenue growth was largely in line with the guidance that you had earlier stated, but given the fall in the metal prices that we have seen recently, are you confident of achieving, let's say, 6 to 8% top-line growth guidance that you had given at the start of the year?
So I think that honestly, in our commodity type of business, we are more interested in growing the EBITDA than the top line. So if you look at it, this quarter, our consolidated EBITDA of 7,992 crores was up 31% year on year. So I think that our focus is on profitability and margins more than just trying to grow the top line, because the top line in a commodity business is very much driven by the price of aluminium and copper, which is not really in our control. So what we try to focus on is the profitability.
Mr. Pai, the copper business numbers were at an all-time high. EBITDA has come at 805 crore, much better than guidance of 600 per ton given earlier. So you are sticking to 600 quarterly EBITDA guidance or are increasing it?
No, I think, frankly, this quarter, the sales were much higher than expected. The demand was very strong. Operational efficiencies were good. So we got a higher number, but there was also some amount of hedge accounting noise that came in, which can always go either way. So I think on a consistent onward going basis, we will stick with the 600 crore guidance.
All right. And also, Mr. Pai, morning, wanted to get in a sense from you as to what the outlook is on the aluminium segment, because EBITDA had benefited from the lower raw material costs. Will these benefits continue even in Q2 and the rest of the financial year?
No, I think that for me, what I can see in Q2 is that our costs are probably going to be flattish versus Q1. And we can already see that the aluminium prices have come down by about $200 a ton. So I think for Q2, you are going to see the EBITDA per ton to come in a bit lower than what we had in Q1.
Satish, I also wanted to get a sense from you. This entire headwind which could appear from the Supreme Court order, which has given power to state government to levy the royalty on mining, any rough estimates as to how that will impact you?
So I think for us, what we worry about more is on an ongoing or a prospective basis. We do hope that state governments, central governments as a combination do not put very onerous taxation on the mining industry, because India needs more mines to open. We need more metal, we need more minerals. So I think that any concern we have is on a prospective basis. We hope that taxations will remain reasonable.
FY25 capex plans and capex guidance, and is also the company sticking to the capex plan of 4.1 billion for executing Bay Minette project?
Yeah, absolutely. I think we are very clear that Bay Minette is on track. The budget of 4.1 billion is on track, and starting in September 26, nearabouts, is also on track. So no change there. And even on the India capex guidance, we had given 5,500 to 6,000 crores, and the guidance is still the same.
Right. And for Novelis, the company mentioned that the new contracts are repriced at a higher level. So what kind of EBITDA margin can we expect for FY25?
So I think that, what you're saying is that the CAN contracts are getting repriced at the higher rate. So we, in the short to medium term, are guiding $525 per ton. And once the Bay Minette capacity comes in, we are expecting to be around $600 per ton. So that's our guidance. No change there.
Okay, so no change at least in that guidance, but the net debt increased this quarter by almost 4,000 crore on a sequential basis. And I understand this could be on account of the working capital pressures that might have come in at Novelis. But what's the debt situation right now? Do you have a plan to reduce debt, or is it going to stay elevated? What's the roadmap?
See, in India, we are net debt negative. Our gross debt in India is around 8,000 crores. So we don't have any plans to reduce that anymore. In fact, we have no repayments due for the next 2 years. So India, I think that no, we don't have any further plans to reduce any more debt. I think in Novelis, what will happen is that as the Bay Minette project continues to be executed, we have said that the net debt to EBITDA in some quarters could go up to 3. But once the project is completed, we'll be back at the normal 2.5 type of net debt to EBITDA rates.
All right, Mr. Pai, thank you so much for joining in and interacting with us, giving us some growth targets as well as what the outlook is for Hindalco down the line.
If you like this video, then like, share and subscribe to ET Now.